end of month, end of quarter, June 30th, just after 3 p.m. S&P roadblock ahead. Well, we'll find out. July, historically and seasonality wise, is a bullish month. Stocks have essentially gone straight up through a little pullback in April. I don't mean little by Liberation Day. I mean little as in like we pivoted April 9th. We had a pullback like the April 11th or 12th window. And then from April 12th onwards, we essentially melted up to recover for April and formed just a massive wick to the downside and just finished like 1% down where it was down like, 12 to 15%. And then May was just takeoff, like rip in May. We had the U.S.-China trade agreement gap in May. That was a 90-day pause. The whole world's on a 90-day pause. That window is maybe in the next week or two when nobody seems to care. Apparently, it doesn't matter. Apparently, 90 days isn't a big deal. And here we are, like hitting near all-time highs once again. We opened today at all-time highs. We're back up to the highs right now as we speak at 61.95, potentially climbing to 6,200. I put on a couple of trades I thought were interesting today in my waterfall income service. I constructed a call condor trade, and I'll talk about that. I shared that with members this afternoon. And I also put in, I think we had 5 new trades put in for my pinch point scanner. We found some good setups on Palo Alto, Apple, WAT, CWST, ETR, and VTR. So, yeah, I mean, we're definitely throwing some trades out there. Some of these expirations are out into August, September. Some of them are near term. I do have a couple hedges in case the market gets a little wonky, a little wobbly here at these highs. Earnings season is just about to kick off. Let me take a look at that on some earnings calendars. Let's go to stock twits, go to earnings, and see when exactly do we get our earnings season. So it's certainly not this week. This is like tail end. There's nothing going on here. Let's go to the week of, and this week with the holidays, not much. I mean, yeah, there's no earnings on Friday. Markets are closed. Nothing to report. Non-farm payroll on Thursday. So I think this should be the 7th. If I'm starting to see, so Delta Airlines, we're starting to kick off here a little bit. We should see some financials. So starting on July 8th, let's go after the 8th to probably the middle of the week going into that monthly expiration. BlackRock, Wells Fargo, here we go. We're kind of kicking off earnings season around the 14th. So a little bit more dripping in. My newsbreaker service will get a little bit more active here middle of July. And we'll start looking at, when things are really starting to roll in. I mean, maybe it's summer and maybe things are slow. Maybe this market can't be stopped. But if there's, I don't know, any type of disappointment, the Fed's not going to talk until July 30th. They've updated their watch tool now is pricing in 3 cuts by the end of the year instead of 2. Powell and company will be talking for the July 30th FOMC. So here is the CME watch tool right here. And I just go to the probabilities tab. Highly expected there's still going to be a pause through July, so 80+% or 80% there, roughly 78.8. But September, a very high probability cut in September. October, this has now been changed. Instead of a pause through December, looks like we have a cut coming in September, cut coming in October, cut coming in December. So 3 cuts this year. Again, the Fed cutting rates while core PCE, CPI, PPI, all these things have been going up a little bit is interesting, and we're doing it at all-time highs. So I mean, for the most part, like you could argue that it's stupid that the Fed is doing it, but you could also argue it's probably bullish for stocks. So I just wonder how bullish, and I wonder if the markets are already pricing in this switch in rate cuts. Maybe it is. So I think if rate cuts are getting priced in, I think that the market is then going to shift gears to like how are earnings, and I think that earnings and growth and forward guidance and how many times companies use AI in their transcripts over the next 30 to 60 days will make a big difference to where this market potentially goes. We are not seeing a bunch of market breadth out there. If you take a look at the S&P, so how many stocks above the 50-day? We have 70+% of stocks right now in the S&P above the 50-day moving average. How many of those are above the 200-day? Around 51%. So if you want to see like a good looking bull market, you're probably going to want to see the market breadth on the S&P 500 above the 200-day climb up to be greater than, we want to see this greater than 50. So if this gets greater than 50, and stays there. So I mean like we want to see it break above this level, probably around 50, 55. If we get about 55% of stocks above the 200-day moving average, there's certainly room for this broader market to continue to go higher. I still think a pullback is needed. The closest thing I saw, I mean, let's just go back to COVID times in the SPX, where the market, recovered in what, 2 months during the COVID crash. The market recovered in like 30 to 60 days. So there's your COVID crash from the bottom. Let's say this. Let's just compare this to today. So this would be your March to April, right? So this would be March, April 2025. That's what I'm going to compare this to. So this would be the same as March, April 2025. April pivots, and we spend a couple of months going up. Now, how many months did it take COVID to get back? So this high was in February. By the time we reached August, we were sitting at highs. Okay. So we were sitting at highs by July to August, which means we had a little hiccup here in June. We didn't really see that in 2025. We didn't have much of a hiccup at all. Okay. So that little hiccup there, we get to all time highs, which we are at them now. We get to all time highs. We have a 10% correction coming into late August and early September. There's a 10% correction. There's an 8, almost 9% correction shortly after. So a lot of kind of seasonal indecision around that like late August, September zone as we, revisit all-time highs after a nasty correction. So fast forward to now, my question is, okay, have we had a pullback? Not really, you know? So I'm wondering at, this high and this high, does this market have any care in the world about resistance? Maybe, maybe not. I do wonder how much good news is being priced in. I think a lot. I really do. I think that this whole shift to growth, this whole idea of easing tariffs, the market just doesn't care anymore. It's all focused on earnings. Well, earnings season is still 2 or 3 weeks away until it gets into like main earnings season. And this melt up to kick off like this week, especially limited trading. We're squeezing in a non-farm payroll on Thursday. No markets open on Friday. It's either going to be like a chop fest because there's nothing going on this week, or the market's just going to continue to celebrate all-time highs and see some forced buying at these tops. Okay, so could it be a bit of a blow off top? Maybe a bit, but I just don't know how this thing can run without having some type of pause. Okay, so we're officially at all-time highs. So do we have a pause? Anything between, let's say, 62 and 5,900? Do we have a bit of a correction where we hit highs and maybe have a little correction in here, then the market takes off again? I don't know. Okay. Anyway, I did post a trade today for my waterfall income. We are selling above 6,500, and this is out to August and September. So I'm looking to see if by August, September that we're below around 65.50. If we're less than 65.50, I have around, I don't know, $3.50 credit or something like that. Maybe a bit more. Let me actually look at my spreadsheet and find out. So let's go to waterfall. I have $3.90. So if I put a line in the sand, that would be 65.35. So horizontal rate at 65.35. So here. So 65.35 and 66.40. So I'm going to add this in. So this would be my August. So a call condor trade. And then this one will be my September. So this is September 30th. All right. So those two levels that I took today, in addition to us having 2 open trades that are still running for profit. Okay, so we'll see. But I think the nice thing about those trades is anything that happens to go sideways, time is in my corner. Anything happens to go to the downside, these will quickly show profit. The call premiums were insane today, actually, because it's to me like it's a pretty well positioned, like moderate risk, reasonable reward. The call premiums to me are pretty good. I mean, I take a lot of these trades on waterfall income, generating maybe $50 to $100, and today it's 160 to 230 based on how I constructed the trade. And that's not max profit. There's still like potential $5 profit trap in each one that maybe if I'm super lucky, I get an extra $500 on each trade. So potentially another $1,000 profit trap. Lee, yeah, Jerome Powell is speaking tomorrow. Yeah, there's a whole thing going on in the ECB. I saw the Bank of England's there, Bank of Japan's there, Powell's there for the Fed. So it's a whole summit. I mean, is it noise? Is it something? Is there going to be anything from headlines? Maybe. So we'll see. How come the June 30th JP Morgan call? Yeah, because it was delta hedged. Good question. 59.05. I mean, it was two things, right? Once we're above it, you have to remember, once we had like a major resistance level breached, then that becomes support because the market, especially market makers, if it's well above that level, it's going to be delta hedging. So once we breached 5,900, it was just delta hedging, which is why I think this melt up happened. So let's say this initially started at a 10 delta. Well, as it got into like a 40, 50 delta, everything above 59.05 was just buy to offset that. So, I mean, it's not perfect, but I will say this: we have a new tomorrow's new quarter, right? It's tomorrow's new quarter. So, roughly speaking, and this is roughly speaking, I'll put this on my chart as just kind of a gauge. Let's go out to we got July, August, September. Let's go to end of September. So September 30th, end of the quarter, we should have on the SPX another kind of big collar trade. This should be something around maybe like a 20 delta. Okay. So somewhere here, maybe around this, like, I'm going to just guess around a round number. I'm going to say 6,600 should be round number. 6,600 should be round number. So change this a little bit. Let's go style. Let's go black. Let's go JPM 20 delta resistance. And put this as 6,600. Okay. And then go all the way down to a 20 delta put and see where that 20 delta put's leaning as well. Probably around like 57, 5,600. I'm showing around 50. I'll put 57.50. I'm kind of looking at like a roundish number around those 20 deltas. I'll put 57.50. 57.50. I'm just going to move this one up. So 57.50. JPM 20 delta support. Okay. So give or take, based on tomorrow as we open up a new quarter, this is where current price is at. That's roughly our resistance. That's roughly our support. Market can obviously go up. It can go down. It can breach. It can test. It can do all sorts of things. We're hitting 6,200 right now. I mean, just look at this stupid melt up, by the way. Like this, and again, I hate to sit here and hate on the market when I'm up, $7,000 today. I'm up over 300K. Like, I'm not complaining too much. It just makes it difficult when I've got a lot of cash on the sidelines and I'm like, I'd like to participate a little bit more than I am right now. But I'm just generating income. So I did that today. I rolled some calls on IWM. I'm going to add another leg to my TLT position. I don't think we're trading over 89 today. We better not be, or else I get it called away. We're trading at 88.24, so I'll add that tomorrow. Intel, I rolled calls. This is out to Friday, I believe, on Intel. We go Intel. July 3rd call. So I'm going to roll these a little bit. We're trading at 22.39. I may not have to roll it, so I'm trying to avoid that since I still have a little bit of profit that I could still get. But anyway, that's on the to-do list. Snap I already did. JD I already did. This one's actually up. I might take some profit this week on JD. So I rolled some calls. My 36 calls I rolled out farther. So now I have a cover call at 36, 36, 36 out to August 1st. Pulled in on those. So this is 8/1 expiration, 36 sell call. Okay, I pulled in 44 cents on that on about 1,500 shares. So 44 times 1,500, about $660 of income. And if it gets called away, it's going to go up another $3.50. That one's done. Pfizer, I'll add something to it. I don't know if I really want to add much. Pfizer's premiums are so bad that I don't really want to add a sell call to the diagonal spread. Although I should, I just don't want to, because if price goes up naturally, I get a lot more premium as price goes higher. The premiums on Pfizer are so bad. TLT, I'll add more tomorrow for the next 30 days or so. IWM I rolled out for $1.05, and Tesla. Did I not do Tesla yet? I think Tesla's by July 3rd. So Tesla collar trade. I'm going to hang on to this one a little bit longer. This is already up almost 80% on that collar trade. I do have some covered calls here. This one is, yeah, I'm just going to keep these. So 255, 255, 255, 255, 280. These are all covered calls for Thursday. I'm going to roll these out. So I'm already up a couple $1,000 on those covered calls, and I'm just going to roll those out by Wednesday, Thursday, and that'll be like some income stuff for this week. Okay. Anyway, that's what's going on there. We have about 35 minutes before the close. We're up to some fresh all-time highs again. This market turned pretty hard around 61.75. I mean, like, just nothing but up. What I was gonna say is, looking at this SPX, two big events stand out. One is the U.S.-China trade agreement gap, where we paused U.S.-China tariffs by like 90 days. That was the big gap. The market broke, retested, and we haven't stopped going up. This is the ceasefire. We haven't stopped going up. I mean, think about, like, this is the market pricing in a lot of good things. We're pricing in like the quiet trade war stuff has been muted. We pivoted hard. We priced in a ceasefire. Now it's up to earnings season. Now it's up to the Fed. The Fed's cutting rates. It's like all these things are getting priced in. So is it possible that the market hasn't priced in enough good stuff? I mean, I guess it's all possible. But that structure didn't matter, so I'll delete that trend line. We're way up. I mean, there's so many levels of overbought conditions now. I'm going to see one thing on my relative strength. Let me look at some macro stuff here. I've got a workspace called macro, and then I've got my workspace with the zigzag and all this other fancy stuff. So let's do this. So we're trading, I mean, MACD, another crossover. This is relative strength. We're really close on the daily chart to getting overbought conditions on a 14 and 21 period relative strength. And also money flow is still kind of pushing higher. Gosh, it's still working. It's still up. I mean, look at this freaking market today. This market's just ripping 61.75. We're up 30 points within an hour. We're up 30 points in the last hour. Weekly RSI still not overbought. Weekly signal, I mean, this is obviously way laggy on the MACD. Money flow is going a little bit higher. Let me try my, what is it? Harmonics and pivots, I think. Where'd it go? Harmonics and pivots. This is my other workspace. Okay. So we're at 6204 weekly chart, looking for a zigzag top. I just don't know when it is. I'm certainly not trying to call it. Daily chart, it was already looking for a zigzag top. Kind of found it. Didn't really. It's just repainting. But here's what I'm looking at. Daily overbought conditions on the relative strength 21 period. That's not nothing, right? That's a 14 period close. The 21 period has to be close. If I change this to a 21 period, it's got to be close to overbought. Okay, so the 21's not quite there. Let me do this. Let me add in, that's a 14 period. Okay, I'm going to keep this one at a 14, or I'm sorry, 21. Let me put in, this is a ATR. Let's delete this one, and I'll add in another relative strength. Relative strength, and just focus on the 14 period. So all I care about is, I don't want the moving average. There. So 14 period is overbought, 21 period is close to overbought. Divergence on the momentum. So price momentum disagreeing. We're just not quite there on the daily. NASDAQ, we got to be close. Weekly, again, zigzag is looking for a top. A little bit of disagreement here on the SPX weekly. Just straight off the lows. 14, 21 period RSI, just not there yet. I mean, is this market capable of drifting up to highs through the month of July to get this RSI into overbought territory on the 14 period, on the 21 period? Could this be another 2, 3, 4 weeks of melt up? Sure, maybe. But it's all very possible. Okay. So I don't want to call the top. I think it's silly to call the top. This market might have more good stuff than I know of to price in, and it's silly to fight it. So I'm not trying to, right? But at some point, we'll have to have some type of pause or pullback. I just don't know what it is or when it happens, and maybe this market just doesn't care right now. Clearly, it doesn't care about a lot other than trying to go to all-time highs. And now that the coast is clear, this whole idea of a trade war and everything's back and 401ks are at highs again, and everyone's happy to be an investor again. We're back to all-time highs. We navigated the markets, blah, blah, blah. Yeah, I mean, I still think even for a bullish pattern, it's like, okay, let's say the market can pull back, does pull back. I still think that's a bullish trade. You know, I still think that's a good looking bullish trade. We'll see, you know, but just not going to call the top. Like, connect the dots there. We have higher levels. Connect the dots there. We still have higher levels. So it's just not worth it. Don't call the top, man. We know this market can run, and it can run up hot, and it can, as they say, remain irrational longer than traders can remain solvent. So don't be a bear. Don't be a perma bear. Perma bears are stupid. I mean, seriously, how many times have you made money in the last 10 years? It's like twice. You know, I mean, you had little hiccups here and there, but it's like if you just buy dips instead of trying to sell everything, you make a lot more money. So anyway, market's up to all-time highs today. NASDAQ probably leading most of the way. So let's look at the tape. SPX up 0.44, NASDAQ up 0.57, Dow is up 0.49, Russell is at 0.32, volatility is down. Let me go to this chart here. I'll get rid of these workspaces. So this workspace and this workspace. Close these down. Let's take a look at the NASDAQ. So here's NDX. I thought this trend line actually matter. Maybe it does, maybe it doesn't. Qs. I do have a bear call spread, define risk. We'll see what happens. This is out to the July 18th, I think, expiration. I think. I'll double check that. Maybe it's the end of the month. Let me go QQQ. QQQ here. Bear calls out to the 18th. So I was looking for a little hiccup here at the highs, but I'm silly. It's only a dollar spread. What else? Dow. I mean, the Dow's making a nice little charge to get to these all-time highs. We should be within about 3 to 4% of all-time highs. Dow's about 2.5% from all-time highs. So what else can be priced in this positive? SPX at all-time, or S&P at all-time highs, NASDAQ all-time highs. Can the Dow creep up here 2.5% to hit all-time highs? Right? Can the Russell play catch up as well? I mean, the Russell has like 10+% to get to all-time highs. It is still 13% away from all-time highs. But a major melt up could be the Dow hits all-time highs, the Russell still continues to play catch up, and the small caps maybe outperform in the near term. Right? So that, I mean, that could be like the positivity priced in. I still think there are some potential like roadblocks at, you know, seasonality wise, like end of August, September, October, some roadblocks and pauses, some pullbacks. Earnings has to come in a big way. I mean, I think the market's right now at 24, 25 times earnings is kind of priced to perfection. Let me get some stats here. I listened to an interesting podcast this weekend, and let me have a look. So a couple things that are a bit concerning is that we're not hiring. Like U.S. markets, the only thing that's making jobs in non-farm numbers is service, tourism, hospitality, healthcare, which are kind of, you know, those are big areas, and then government subsidies. Most other stuff, it's like if you're in tech, there's no jobs. Tech is you know, letting people go. They've been, you know, quietly cleansing since 2022, and hirings are not coming back. It's all about AI. It's all about profit margins. So that I think is a concern. Also, let me see what else we have here for. Was that it? That was just the job stuff? Hmm. Yeah, I guess it was the job stuff. Anyway, it was just pretty eye-opening about like how aggressive this like tech sector AI race is not leading to jobs for people. It's leading for profit margins. And that's a good thing because it's still a boon for stocks. Like higher profit margins are good for investors. It's good for owners. It may be terrible for bottom up workers. I mean, anyone in America can get a job right now. Doesn't mean it's the best job. You can get something. You can be an Uber driver. You can work for DoorDash. You can work in the service industry. You can do all sorts of things that you know pay the bills. Doesn't mean that everyone wants those jobs. So I just don't think we're there yet to see like, oh, this crazy soft labor market. I mean, like I said, people are working because they can get jobs. Um, but maybe this whole thing is, thin ice moving forward. It's just how long? Next 1, 3, 5 years before the labor market really cracks because it shows there's no jobs or they're so um, undesirable that nobody wants them. And then what? Companies find a way to replace them with humanoids? Like, who knows? So that's the scary stuff. That's kind of Orwellian, but we're gonna have to trade it at some point. All right. Anyway, could the Dow get up to all-time highs? Maybe. Could the Russell keep playing catch-up? Maybe. S&P and Nasdaq at all-time highs. Let's have a look at dollar index. Dollar index down to some fresh lows. It continues to melt a little bit lower. Dollar is down. Bonds are catching a bid. 88.36. I mean, honestly, I'm close enough to my sell side diagonal spread that I might just throw in another one at 89 and just let it get called away this week. Maybe. I'm going to see if I can get an expiration on TLT. Let's find out. Let's see what I can get for TLT. So I can go July 2nd, July 3rd. That's Thursday. I mean, maybe I sell this like 88.50. Get it called away, put an end to it, grab a couple of bucks. Maybe I go out to the 7th and take on some of the time of the weekend. It's not really giving me a big premium there. I mean, seriously, like July 7th to the 3rd. So if I go to the 3rd, which is Thursday, I get 34 cents. I get an extra 10 cents, not even, to go out for another 3 or 4 days with the holiday. But then again, it's like if by Monday we roll on, I'm at 88.50, then I get it called away. So more than likely tomorrow I'm throwing on like a Monday 88.50 diagonal, and I'll sell that at 88.50 if it gets called away. It gets called away. So should grab another like 40 cents. I have a bunch of contracts here. So TLT, pretty sure I'm over 300 or 3,000 shares over 30 contracts. 4, 8, 12, 16, 26, 28, 32. 32 contracts worth. Okay, so 32 contracts worth at an extra 40 cents. Oops. 42. Good Lord. There. So an extra 1,300 bucks to the bottom line. That should help me get about $13,000 if it gets called away above 88.50. So, I mean, the good thing is today, this is all in profit. This will expire. It's not going to rally 70 cents here in the last 23 minutes. So I'm getting full profit there. I can just add on the other side of the trade, 65 by 89 or 65 by 88.50. Let it get called away. Break evens in the like low 20s. And I get it called away for like in what, 23.50 profit. So make $3 to $4 per diagonal spread at 3,200 shares. So it does some work. It's not great, but I don't want TLT in my I don't want a bunch of TLT in my portfolio. I really don't. So I'm trying to actively get rid of it. We might stabilize here. We might go sideways. I'm not going to play the sideways game. I don't trade TLT that much. It was a little like low impact, low drama. Give me some yield. Try to lower my cost basis. Maybe have a 10% allocation of bonds. But I'd rather take this capital. I'd rather take those 30 plus contracts and put them into gold, silver, and Bitcoin. I mean, protect the downside on those, but have way more upside potential. Lee says Zuckerberg going on an AI hiring blitz, boosting Meta shares to all-time highs. Yeah, AI hiring blitz is like hiring what? Hiring a team to be more productive and do more with less and have way less people. It's like, I mean, look, if you want to talk Mag 7, look, Apple is not really benefiting from like the Mag 7 run. Like Mag 7 from a traditional sense is probably going to look very different at the end of the year. Like in my opinion, Mag 7 isn't going to be the Mag 7 by the end of 2025. It's going to be, who's all in on AI, and that in the Mag 7 space. I mean, it could be stocks like, I mean, Microsoft. This is what benefits. This is what the AI benefits look like. I mean, Microsoft is straight up from these lows. I mean, fortunately, I'm in Microsoft. I'll let it keep going. Amazon, better, still has room to catch up. I'm hoping Amazon still gets up here to all-time highs. Amazon can play catch up too. Meta, all-time highs. I mean, so Microsoft looks way different than Apple. Amazon looks way different than Apple. Meta looks way different than Apple. What's not benefiting? Google. Okay, Google still playing chop fest around like the 160 to 180 handle, off the lows at 140. Could we get to all-time highs at 206? Maybe. But I think Apple, Google are going to be slow to the AI place. I think they're going to be slow as far as price action to the upside. Tesla, of course, started off with a horrible drop, and we've got all this drama between Musk and Trump, and it's still not done. I mean, Musk was pretty vocal this weekend on Trump and this whole tax bill going through and what it means for Americans and jobs. And yet Tesla stock isn't getting crushed right now. Trump hasn't really said anything yet. So, and that's one thing that is a potential outlier. It's like, is this bill going to pass? I would imagine it does. If somehow it's meeting some contention, or there's anybody that just pivots and doesn't vote, party lines, then maybe there's some drama in the markets. But I doubt it. I feel it's going to pass. I mean, those in power, if you don't raise the debt ceiling, you're an idiot. Those in power, if you don't pass something like this, is trying to seek some type of bipartisan or shove it through, you're an idiot. Like, it's like nobody's going to vote. Like, nobody's going to vote for what's right. They're just going to vote for staying in power. To stay in power, it's don't disrupt, right? You don't want to lose your primary seat for 2026 midterms. Don't disrupt. Like, unfortunately, that's the U.S. system. It's like you get in power, you stay in power, and right now majority is leaning towards Republican, and I mean, even 215 to 214 that's a thin vote margin, but I don't know if the House has to revisit it or if it's just going to pass. So we'll see, but I just don't see a lot of like drama in the markets over these next 30 days. Maybe August, September, maybe this big like refinancing pocket. There's all sorts of stuff happening. If you want to look at bear stuff, it's out there, right? I mean, student loans, kids that are coming out of college with debt and don't have jobs, the labor market that's seeing only things in service, tourism, hospitality, which is all lumped in the service industry, and then healthcare and government jobs. That's it. And government jobs aren't hiring; it's just a subsidy. But it's like we're moving toward, I don't know, it's like we're moving towards AI probably a lot faster than the government's ready for. And it could be, I don't know, it is disruptive. It's all disruptive. So the good thing is maybe while we're at it, we get this awesome melt up and we make a bunch of money in the stock market. But man, if we displace, 20% of the workforce, 25% of the workforce, 30%, I mean, just imagine numbers like that. Like, that's awful. And the markets will reflect that. If it gets that bad, the markets will reflect it. So unless we're going to just absolutely tax the bejesus out of all these companies that are making all these profit margins, I just don't know how this works. I don't know how this works moving forward without having some type of massive reset. But that could be years away. And if we run into bottlenecks where we can't actually get enough energy or efficiency to support AI and this growth of AI, that's a bottleneck, you know? So I feel like the whole AI race is moving at like, light speed, if you will. And we're still sprinting, but we're not really able to move as fast as technology. And so there might be some bottlenecks along the way, but it's like right now the sentiment is just go. We're going, just go, make as much money as you can, increase profit margins like crazy. Market's bullish on optimism. We pivoted hard on the trade war, which is the only real concern coming into 2025. So that's where we're at. Okay. Let's see here. Dean, what time did you close out your trade there? In a little over an hour. Yep, so you got it early on. Yeah, so it was right after we wrapped session, right? About 20 minutes after we wrapped. Get your $100, man. Get your $100 on, Dean. Good work. Good stuff. Okay. 6203. This market just doesn't give a crap about anything other than trying to go up. So market breadth, like I said, I'll kind of circle back to that. I'm going to cancel this trade here on. I put a butterfly spread in an SPX that didn't get filled. So this trade is not going to fill. Give me my buying power back. There we go. Okay, so some fresh highs in the portfolio. No complaints. Some income trades. Tesla, IWM, TLT, JD, Intel. I mean, overall, that's helping. If I'm not just getting all this extra gains from like price appreciation, at least I'm generating some income on premium. It helps. I'm probably making an extra $4,000 or $5,000 a week. It adds up. Just takes time. It's just not glamorous. I wish I could say like, oh man, I've been riding Palantir since the lows of April. I haven't been. I've been riding him since the low of April. I haven't been. I've been riding. I mean, Microsoft's probably the only Mag 7 that I participated in at the lows. It was a lot of ratio spreads, a lot of debit spreads, a lot of credit spreads, a lot of naked puts, and now it's just owning shares. And I've had shares since like the 400 mark. Um, that's it. Like it hasn't been like, I mean, the path to $300,000 this year has not been like, I haven't chased anything. It's like I just sold premium when VIX was high and benefited a lot from that. I battled the downside and had some good hedges that helped me, take a drawdown that was maybe 6 or 7%, and then just participate on the way up. Gold's been in there. Gold's been doing well. Silver's doing well. Bitcoin's doing well. Like, yeah, it's fine. I'm sure with everyone's like outlook, it's like it could be better, it could be worse. So Bitcoin at 107.50 right now. Gold, I still think a pullback on gold is likely. Maybe a pullback towards like 3,100. Maybe if we're lucky 3,000. If we're lucky 3,000, I'd like to see this kind of accumulate more. I don't know if there's going to be more downside in gold. See what the bond market does. Bonds caught a bid here. Pretty big bottom back in late May, so May 22nd. Pretty big bottom in the bond market. Again, things are pretty stable, offering their risk-free 3.8%. Treasury-wise, I mean the U.S. 10-year. 10 years fading a little bit. I've got 4.23. I'm starting to see some signs popping up for average mortgages at 6.3%. I think that's absolutely garbage. Right now I'm showing 30 years average at 6.77. I feel like that's some false advertising going on because we have not seen rates really go down. I was actually closing on this current house down here, and I locked in a 6.6. And I thought for the timing of that was pretty good, all things considered. I'm watching, of course, because if we do get lower yields, then if this gets down to like 5.6, it's worth a refi, in my opinion. That'll save me some bucks. But we'll see. We'll do the numbers on it. Otherwise, we're still above Liberation Day levels. 20-year, still above Liberation Day levels. We've poked the 5+%. I think yields are going to continue to stay pretty sticky. Where yields might get a little bit more interesting is probably going to be September when the Fed cuts. We'll see how the bond market reacts to this. If the bond market reacts adversely, then we'll see yields go higher and bonds could be all over the place and equities could go all over. Who knows? But that's the one reaction that was weird last year. This reaction with the Fed cutting rates, are we going to do the same thing again? Right? Are we down here and then the bond market reacts like this is not what it should be doing, but that's how it reacted in 2024. Okay. What do you think of the dollar? I just say this again, like be careful on the dollar just because it's already at crazy lows. If I go back to my, let me go to my harmonics and pivots workspace here because that's got some good overbought, oversold conditions. So DXY here. Okay. So weekly time frame. What happened to my third chart? Get out of here. I want that. This is 14. So 14 period, we're oversold. This is a weekly chart. So we're oversold. This is DXY. Oversold on relative strength, 14. Let me put in another one. Okay, let's move this up. Okay, inputs, 14, style. I just want one line. Okay, that should be a little bit better. All right, so now You can see that the 14 and the 21 period, weird. Actually, you know what? Let's go 14. Oh, this is the same thing. I need to go inputs to 21. There. So now you can see we're getting close. I've got a 14 period and a 21 period overlaid. We're close. We're close to having both on the weekly time frame oversold, and we're making some fresh price lows. Momentum is kind of flattened out. It's not divergent. I mean, to get this thing to show more divergence would be probably something to the effect of like we make fresh lows in the dollar and we're here with momentum. So you want to see that. You want to see that. That's the weekly chart. You go to the daily chart. Daily chart's very different. Daily chart's already oversold. Daily chart, we've got divergence. Divergence, divergence. This is what I'm saying. Like, I don't want to sell the dollar at these lows. I think this is a bit of a bear trap. I'd say be careful. I think this dollar can catch a bid and get squeezed. I think if the market hiccups at all and goes the opposite way, that little push, this is a symmetry level they should be aware of. This high to low, right around this 96 handle. If we hit that symmetry and start to pop back up, if the dollar catches a bit of a bid, what does that do to bonds? What does it do to gold? What does that do to Bitcoin? What does that do to equities? I don't know. Right? I mean, dollar up, that might be a risk off briefly. So I just don't know. But the dollar has just been dead cat bounce, dead cat bounce, dead cat bounce. It's just not going anywhere. Like it's not going up, I should say. So I mean, honestly, like I'm even reluctant to buy the dollar with the exception of maybe a tight stop loss. And you're essentially trying to catch the bottom, which we all know that's a silly thing to do. So I don't know. Don't force trades on the dollar, in my opinion. We're already seeing oversold conditions, but let price play out because I think the easier trade is either this thing goes all the way down, and I'm going to miss some of this if that's the case, or this thing squeezes up, cleanses the crowded trade, and then all of a sudden it's a better short for a much better trend to the downside. Maybe, So I'm just trying to pick my battles. I just don't like selling dollars at a 9+% low. This is like the worst start that the dollar's had ever in 40, 50, 60 years. So that's saying something. But now that we're already at these levels and it's already one of the worst starts it's ever had, I don't think I need to, short the bottom. Okay. Let's see here. Dollar Swiss, euro dollar. I mean, you're just asking about pairs that are completely correlated with it, right? So DXY is going to fresh lows. What's dollar Swiss doing? Going to fresh lows. Dollar index going to fresh lows. What's euro dollar doing? Going to fresh highs, right? I mean, it's just melting up. Like it's just little by little. Okay. You can look at the same thing on euro dollar. Where's my ugly workspace? Here's euro dollar. Okay. Euro dollar. Looking for a zigzag daily chart. Okay. We haven't topped out yet, but we are starting to see here that relative strength is overbought on a 14 and 21 period daily time frame. Highs are being made in prices, and we're making flat or slightly lower highs in momentum. So there is some divergence on the euro dollar. Okay, how about the weekly chart? Weekly chart, again, weekly chart. What are we doing here on momentum? Okay, we don't have divergence on momentum, but we do have overbought conditions. Doesn't mean the top has to be in. Okay, this market might do this, where we hit a top here, right, and we go higher, 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 then we turn. So this could take weeks to unfold. I mean, look at this market today, man. 61.75 lows, it's up 40. I mean, the last hour has just been nothing but up. This market just doesn't care. So, look, if anything, just embrace it. Like, embrace the melt up, get ready for a pullback, and be ready to buy a pullback. I mean, I don't think I can make it any easier than that. The dollar stuff, it's like, I don't think the dollar's going to implode. I don't think the dollar's going to flash crash. I just can't justify selling. It's like, I'm not going to sell the euro dollar at 1770 when there's no sign of topping yet. I'm also not going to buy the euro dollar at a pullback of 1600 when I think we could have a pullback to like 12 or 1100. So I'm just going to sit in positions and kind of let things play out. Meanwhile, stocks are up. Cool. Easy. Position for that. I mean, I'm not going to put a bunch of emphasis on Forex pairs when it's like the dollar's trending for now until it pivots. The Japanese yen, go to dollar yen. Okay. Have we really breached anything on dollar yen? No, we haven't breached the 140 handle. Okay. Euro dollar's up, pound dollar's up. Why? Because they're tightly correlated. I mean, this has been straight up. The dollar index is straight down for the last 4, 5, 6, 7 months. Pound dollar's up, euro dollar's up. Aussie dollar, not nearly as convincing, but it is trading after this little move down to like 63.75. This thing is up into some open space. I think Aussie dollar, and it might be a silly trade, but it's like it might just go up into 6,900. New Zealand dollar, similar, right? Pulled back towards equal lows around 58.50, just shy of that, and we're up to some highs, and we've got open space to trade to like 63.50. I don't want to fight these trades. Like this might just keep running. This could be like just sell the freaking dollar. But do you like selling at lows? Do you like buying at highs? My answer to that is no. I don't like doing any of that in a forex market. I hate selling lows and I hate buying highs in a forex market because it's one of those markets that is notorious for pulling back. And when crowds get very trades get very crowded, when trades get very crowded, the market tends to tell us. So, I mean, look, if it keeps going, great. I'm just not hammering this dollar trade like somebody's shouting like the dollar's dead. Look, buy gold, buy silver, buy Bitcoin, buy stocks. There's lots of ways to make money outside of just selling lows on currencies or buying highs on currencies. You know, what sort of macro conditions should there be? I don't know. I mean, your question is your guess is as good as mine. I think that realistically, if we just catch a bit of a safe haven bid, then the dollar pops and we'll see like a little equities correction. It could be this like 90-day pause thing. Maybe it makes headlines. Maybe Trump's going to say, "Oh, we're just going to extend another 90 days." Maybe he says something that the market doesn't want to hear, right? Maybe he's going to say like, we're still going to do tariffs. I don't know. It just has to be like a sentiment tone that the market doesn't want to hear right now. The only way the dollar catches a bid is if it's like risk off. Because what have we seen for the last 60 plus days? Risk on, equities ripping, dollars down, gold still stable, silver's making a run for poor man's gold, Bitcoin's near all-time highs. Broader markets doing okay. Like, 50+% of stocks above the 200-day moving average, 70+% of stocks above a 50-day moving average. It's all right there. So, I mean, the market as a whole, the globe is benefiting from a weaker dollar, and there's opportunities to exploit it. But I'm just saying, like when you ask me to look at the chart and you look at the dollar index, I don't like selling lows. So I just think that at some point, like the dollar probably catches a bid. I just don't know why. I don't know why it would catch a bid, right? Something the market doesn't want to hear. I mean, case in point, we had Elon Musk and Donald Trump fighting. The market did what? Reacted to it briefly, barely. We had Israel and Iran throwing missiles at each other. The market reacted to it like briefly, barely. Then we had a ceasefire. So like the market can overreact to something. I just don't know what it is, and I'm so exhausted guessing on like what the next reason could be. It's like I don't know. It's like this market ignores so many things like reality that your guess is as good as mine. But I know from a technical side, if the market is sitting with oversold conditions on the DXY with divergence, I can't justify selling those, And so it's like I'll just wait. It's not a good trade. It's too silly. It's too silly and too risky to buy the lows, right? Because it may not be a low. So wait for a trend line, wait for some price action, wait to see if the market can respond with some type of bounce on the dollar. But that's about it, And then you wait to position maybe in the bigger theme. If the dollar, rallies up to 101 or 102 on the DXY, I'll probably sell that. I think that's a better trade. Sell it with a stop loss, right? I mean, if this thing catches a bid and breaks the trend line, backside the trend line, up and up and up, and it hits this level, okay, well, if I get a turn, sell stop loss above. If I'm right, I get rewarded. If I'm wrong, I get out of the trade and it was a dumb trade. I lost, no big deal. Okay. Let's see here. How much time do you give the markets before they correct? I don't know. I mean, I think that if we're look, if we're going to continue to stay on this path, let me go SPX here. If we're going to continue to push at this clip, I mean, think about what we've done here. Let's just go month to month. Let's go month to month. I mean, today's the last month or the last day of June, so we're going to have like clearly a big recovery in May and June. Like I would put May and June of this year up with some of the biggest recoveries we've ever seen. And then April, of course, looks like just a mess because it's just all wick, right? I mean, so what's crazy about the markets is look at where the bulls stepped in and have not stopped pushing. This market is up 28.5% since the bottom in April, that was April 7th, all the way to now. Okay? We're talking about a market that returns maybe 8% a year. And somehow we've had a 30+% move. That's massive, right? So my point is like there's a bit of a seasonality to it. I think if the market can stay on this like steady melt up clip through July, and maybe it does, maybe it doesn't, but if it stays through this like typical seasonal bullish July, I would say like maybe middle August, late August, September is usually the pause of the pullback window. So I mean, we had the market kind of survive itself in April. It could have been a lot worse. It could have closed a lot worse than it did. But April fought back hard. May was a ripper and June was a ripper. So we're back to all-time highs after this huge recovery. So I think that into August, into September, more than likely is going to be this reality check. Now, could that mean the market is just hanging out at like 6,250, 6,300? Maybe, you know. But if we just look at the daily chart, I mean, this is what leaves me scratching my head. Gaps, gaps, gaps. The sheer velocity that we've been going up on just like one little event. US China, straight up. Ceasefire, straight up. It's like that's the stuff from like, what is this? Like, we're not even doing this. We're not even going up and down and up and down and up. It's like it's up, right? So I just wonder if the sheer trajectory here is going to start like stalling, and then maybe it rolls over on itself for a little correction. It doesn't have to be big. Honestly, if it pulls back, fine. I'm not bearish. If it pulls back, I'm not bearish. If it pulls back, I've got cash to deploy. That's what I want to do. But I'm just not going all in at these highs. I think it's crazy. It's like, give me a 5 to 10% correction. I hope we get it. I don't know what the catalyst is going to be, but if we get a 5 to 10% correction, I'll position accordingly. If we get a lesser correction, okay, fine. If we get a bigger correction, okay, fine. You know, possible by the end of the year, very possible, very possible. In fact, it's actually quite possible that the market from this low is going to keep melting up, melting up, melting up until it finishes right around there, right? Where the market it was up like 3 to 4%. If you remember that in the beginning of the year, going into February's highs, it was up about 3 to 4%. Okay. So if we finish around 7 to 8%, we're obviously going to be slightly higher than these February highs, but we could go to 65, 66, 6,700, and then we could lose it at the end of the year. Obviously the market likes to finish on a high note. I mean, typically like December and January don't really, like poop on the market's momentum. But unless we have some type of pullback coming in August or September or October, I mean, where are we going to be coming into that window? We might be at 64, 6,500 for crying out loud. And so then to get back there, then we see, can we end up finishing like on a note into November? I don't know. So like you can draw it up however you want. It's just, I wouldn't be surprised if the market can somehow hang to maybe like a 7, I'll say 7 to like 15% for the year, something like that. Because 7 is just above the all-time highs. 15 actually shows, okay, well, we had highs here, a lot of volatility, and the market rallied up, and we're finishing the year net 15. I mean, that's still on the backs of a 2020, right? 24% 2023, 23% 2024, and another 15% year. It's like that's a hell of a run for 3 years in a row. It could happen. The reason I think this is different than COVID is because we're not. I get like $2.5 trillion is out there, but it's not 3 trillion immediately. Like this is 2.5 trillion over 10 years. So it's not like this is the emergency spending that we did back during COVID. This is also a Fed that is I mean, I guess we're cutting rates, but it's just not the same environment. I don't know how we can position this like this is this is like a Goldilocks environment, but maybe it is because there's no other place to be. Where do you want to park your money? If we're going to see higher inflation in any way, shape, or form, or sticky inflation, I want to be in assets. If we're going to see government spending and fiscal policy that's going to benefit stock prices going higher, I want to be participating. You know, and as an alternative, I want to see maybe gold goes higher because the dollar stays weaker. Maybe Bitcoin goes higher because the dollar stays weaker. Maybe risk appetite is still good and alive and well. But I do wonder what student loan debt looks like. I do wonder what like subprime auto loan looks like. I want to know what the housing market's going to be when the Fed starts cutting rates, because do we see rates actually go down, or do we see yields go up and rates go back up and stay sticky, and then the housing prices have to come down? You know. So anyway, the consumer hasn't broken. Like the U.S. is still 70% consumption, and it hasn't broken yet. And I don't know. It's I just think we have like an incredible amount of wealth disparity in this country. And if you've been in the markets and you have assets, you're doing very well. And there's a lot of money to tap into. But right now, it's like we're not talking trade war anymore. We're not talking trade war. We're not talking systemic risk. This is, and Trump and company said this. It's like trade more, not trade war, right? So this whole thing was like smoke and mirrors. Trade more with the U.S. And if that's what they're trying to do and truly negotiate this stuff, then more power to them. This benefits the U.S. economy. This benefits the world. And on top of that, you put the AI spin on it, where it's like profit margins are going to increase. It's a good thing for stocks. But we will see. At the end of the day, here's my last saying. There's a saying, I don't know who did it, but I think it's a good one, that the government and the Fed can continue to do what they do until the bond market takes away the keys. So the government keeps spending until the bond market says you can't. Right? And so like we saw that flinch in April when the bond market snapped. And that was the bond market basically broke, and the basis trade erupted, and we saw yields rip up like 0.65% in like what, 3 days. That basis trade unraveling, that flinch moment, and I think that's why the bond market right now, it's like it's best to be stable and not rock the boat. So the bond market will ultimately tell us. It's like, and I'm not a big bond trader. I just know that it is a highly sophisticated market with global liquidity. And, we can run this debt cycle until the end of time, and we can keep kicking the can on the road, and the whole fiat system is a part of it. And this giant global reset that might happen and might not happen, I don't know. But the bond market is there to grease the wheels of capitalism. And the world doesn't pay back debt, it refinances debt. you know. But I will be very, very nervous if we see this market melt up aggressively. Like I'm talking, if somehow this market produces like 20% year to date, and we have a 20 and a 20 and a 20% returns for the last 3 years, and then Fed chair Powell's replaced, and we see a Fed chair that comes in that just slashes rates to next to nothing, like we cut from 4.5 to 2.5 or 1.5 or sub 1%. To me, this is 1970s stuff. Like this is strong arming the Fed. The Fed is no longer independent, and we're going to lose all sorts of credibility for potentially hyperinflation mode that we have not seen yet. We have not seen since like the 50s or I'm sorry, 70s and 80s. And that's when Volcker came in and basically broke everything to reestablish some normalcy. But do you think Trump cares if he's out of office in 4 years and his legacy is, look at what I did for the stock market, look what I did with the trade war, look at how much money we made? Everyone, but then it all breaks 5 years later, 10 years later, and we give up 50% of those gains. Like that's the crazy stuff that can happen. We can have all these exciting bubbles where everyone makes all this money, but if you can't manage risk, it's all going to be for nothing. So I mean, the point is, when you have an equity curve, if you can make money, protect, make money, protect, make money, protect, that's a better way to survive these markets, because inevitably the markets will correct. It's just not losing everything. So I'm saying it's all a game. Manage risk. That's the only thing you can do to help. Trade to manage risk. Profits are there. Like I keep saying this, it's ridiculously easy to make money in a bull market. It really is. It's ridiculously easy to see, like when the market's just melting up, going higher, going high. It's easy. Okay. but it's when the market drops 20% in a month. It's when the market has like this weird like black box quant break trade, that black swans, and nobody saw it coming. Look what happens. Like everything is disrupted. So that's why I'm just always looking at risk. You've got to manage risk because you never know. And it sucks, man. Like it's exhausting to just be like, I'm going to put a 0.25% hedge on, 0.5% hedge on, and just watch it turn to nothing. Like I've wasted, 1, 2, 3, 4% of my year just wasting hedges. Okay. But if one of them works, it helps. It's just part of the game. So anyway, I'll put a pin in it for now. If it be Biden's fault, sure. I mean, we all know Trump's not going to take blame for anything. He could be out of office. He won't take any blame. If something does break this year under Trump's administration, he'll blame the Fed. He'll blame Powell. He'll blame anybody else. It won't be him. You know that. So it's Powell or it's somebody else. It's who knows. I said from day one of Doge that Elon Musk is going to be a patsy. He's a fall guy. You can tell. It's just how it's always been. So we'll see. It's a melt up. I mean, we're at all time highs. The markets kind of rejuvenated the optimism, but we are getting some very high levels of call spreads. Call ratios are very high. There's a bit of greed kicking into the markets. Let me go to one thing really quickly before we go. Let's go extreme fear and greed. Okay, we're back in the greed category. We're back into greed category. We're back into extreme greed for stock price strength. Stock price breadth is extreme greed. Put and call options, extreme greed. See what I'm saying? Like, there's a bit of contrarian in there. I think it would be wise to not be crazy bullish at these highs when we have extreme. Fair? So, and we never know why the market is going to shake up a little bit. Why would you rattle the extreme greed? I don't know. Something, but we don't know. I'm just saying, like, it wouldn't surprise me if we have something rattle the markets in order to have like a little 5 or 10% correction. The market can then buy more. We can participate more. But it's that little shakeout that I'd like to see just to have a semblance of technical analysis to buy. I feel like if you didn't have the courage to buy during the crash, you're just observing a melt up and feeling like, how do I trade this? And there's ways to trade, obviously. I'm just not chasing highs. That's all. All right. And then one last thing for AAII, which will come out on Wednesday, but I'm just curious where it's at. Okay. I mean, according to last week's print, it's still more bearish than bullish, which is just like so stupid. I mean, how is it like, how are you still this bearish? You're watching the market melt up for 60 straight days. How are you still this bearish? So anyway, I think this is interesting. Extreme greed on price strength, price breadth, and call option ratios. Okay. Just keep that in mind. In fact, I'm going to take a screenshot of this, post this in Telegram. I think this is worth noting that we've got some extreme greed out there. I want to be a little cautious at these highs. It's not that I'm not bullish. It's just I think we could have a pullback. That is all. So here, why am I a bit cautious at all-time highs? Fear and greed index showing extreme greed based on stock price. Where are we at here? Stock price strength, stock price breadth, and call option. So put call ratio, heavy call bias. Okay. It doesn't mean I'm bearish, everybody. It's not that. It's just give me a pause, give me a pullback, give me something. Okay. So we'll see. But let's fight a good fight. Come back and do it tomorrow. See you. Bye. Thanks.